I cheekily say the future is now, and I truly believe it. We see news on a daily basis piling up on the theme of the green and digital recovery. I think portfolios need to be prepared for this. Ignoring it might have a bad outcome for a portfolio. The analogy that I use is the one of the mobile phone. Every now and then, our mobile phone is requesting an upgrade of the software. And personally, I don't really like to do that. It's painful and cumbersome. But if you fail to do so, sooner or later, your mobile phone is going to start to misbehave and bug. And I would say it's the same with the portfolio. We need to upgrade to this new cycle. And something extremely clear is coming through in this new cycle when we look at the recovery package and the recovery policy of most countries around the world. In fact, to this date, either being already in law or in discussion, over 60% of the world GDP, these countries have adopted green and digital recovery policies, meaning that the law, the regulation, the way things are going to be financed, all the way to potentially central banks' behavior are going to be anchored in this green and digital vision. And I think you cannot really ignore this when building a portfolio for this new recovery. And I would sort of be relatively cautious on this idea of pure mean reversion. Disruption is going to be at work. And I have to say, I have never seen where 60% of the world GDP is walking the same walk. So it's likely that this disruption is going to be deep. So what we've done is to analyze all this recovery package and new mottos around net zero, and look at which companies would be the enabler of this green and digital recovery, which sectors would be the benefactors, which one would be the new winners, and try to avoid potential stranded assets. What came through is that the sectors that we are favoring currently in our portfolio are around the electric vehicle and its ecosystem, renewable energy, as well as semiconductors. Semiconductors, I often say, is the new oil in this recovery. And in terms of region, this means more exposure to the United States, China, South Korea, Taiwan, but also Japan. And this is really very much where we are focused on the equity. We are early cycles. They are very exciting and good things to be on the look for 2021, with much stronger growth to come. And then on the fixed income side, as curve have steepened somewhat, yields are also backing up a little bit, we will be looking for attractive entry points. So even though 2020 in the end was a relatively good year for financial markets, despite this negative economic growth, it's likely that 2021 also has a lot to offer for multi-asset portfolios.